Hi, good day everyone. My name is Vijay Tigula and I'll be the instructor for the HFM course, and I have 5+ years of experience as an instructor, and it is not only HFM but also FDME, SBS, planning and HFR. I hope you take from this course the principles and the functionality of the consolidation software. So we will be learning the HFM version 11.1.2.4, which is the latest and which is the greatest version. After completing this course, you should be able to basically create an HFM application and understand the metadata and all the properties that are involved in creating dimensions and members within the dimension. So we will talk about what is metadata and what are the dimensions, and we are also going to go through all the members of the dimensions and the properties that are associated. We are going to show you how to first start by creating a metadata manually, and then we are going to show you how you can import a file to update the metadata. Once we get the metadata created, we are actually going to then take the metadata and create a real application from it, and so that we will be able to load and do consolidations. Creating and deploying applications is actually the process of creating a real HFM application. After we have our application created, we would like to send the data to it, and then we will use data forms, which is a user interface to able to view the data and do the manual data input into the systems. We will also talk about Smart View. Smart View is another way to enter the data into HFM. Then we will also talk about loading data with a data file and possibly using an ETL tool like FDME to load data. We will take a look at security, including setting up users and giving them access to the system. The 4 different levels of security we will go through, and how you can restrict users from certain confidential information. After that, we are going to scratch the surface of business calculations via financial management rules. So we are going to take a look at Calc Manager. Calc Manager is nothing more than a web-based graphical engine to write VB script, because rules in HFM are written in VB script. Here we are going to introduce you to the rules and what the purpose of them and how to create them. We are also going to take a look at how HFM handles intercompany activity, the process of identifying an intercompany record from non-intercompany record, and then the process of eliminating. How does HFM eliminate the intercompany transactions? We will also take a look at consolidations and translations. How does the system handle the currency translations? And what is the process to roll up the data so we can see a fully consolidated view of a large company? The last piece that we are going to have here is the process control, which is the approval process. So once we get all the data in and we want to pass it through the management review process, process control is what we will be looking at. It is an optional process. I will show you how to turn it on or turn it off at different levels of review so that we can go through. So with HFM, the purpose is to roll up consolidations. First of all, let's understand what is consolidation. Essentially, in corporate financial terms, consolidation is the process by which the company combines the financial data like income statements and balance sheets from various business units, legal entities, etc. into a parent company for reporting purpose. With that said, some may think that consolidation is as simple as adding the sum of all the parts to get the total, especially for external reporting. While this is obviously the crux of the process, there is a bit more going underneath the hood. A great way to understand the financial consolidation is to break it down into 3 core processes, which is the aggregation, translation, and elimination. Aggregation is summing up the data by financial reporting structures. Example, departments rolling up to segments, business or legal entities rolling up region, accounts rolling up by major financial reporting lines, etc. Translation means for multi-currency applications, the process of translating from local currency into any other currency as defined by company's entity structure. For example, we need to report a EUR entity into a USD. Elimination, transactions between 2 entities within an organization must be netted to 0, since a company cannot generate net activity by itself. Okay, so for example, intercompany receivables should offset intercompany payables. To accomplish the above, HFM Oracle consolidation system basically utilize a value dimension. Some say that this is where all magic happens. Here is the product architecture. As HFM is a three-tier architecture, you have a client tier, you have an application tier, and you have a database tier. So client tier is for developers as well as end users. Using client tier, we log in to something called workspace and create an HFM application. So in the application tier, we start some of the services. I'll show you the services that you start before you actually work on HFM. So in the application tier, if you are, we basically start financial management server. If you are working on EPMA, then we start our EPMA services. In the database tier, we have a relational database. So what all things that you do from the client tier would in turn basically saves in your RDBMS. So this is, so what is metadata? So you would be able to hear, you will be hearing this term very frequently. So what is metadata? In this situation, we kind of separate data from metadata. When we talk about the data here, we are typically talking about the numeric value, the number. But that that numeric value is meaningless unless we know what the quantity value is it for. If I say we have 3689 of what? The metadata is data about data. It describes the number. In this case, it is sales of cola for the Manhattan business unit. It is actual sales for the January time period. So metadata gives you more meaning about that 3689. So when it comes to HFM, we have 8 required pieces of information that describes data. So financial management provides 8 system defined dimensions and enables you to populate an unlimited number of custom dimensions. So in this class, we will create 8 required dimensions and 4 custom dimensions. So when we are doing financial statements, we are going to have a chart of accounts. So when we have spending or money coming in, we are typically going to have an account that describes what kind of activity we did with our currency. Did we spend it or did we receive it? So that account dimension is typically your chart of accounts. Entity, most of the business are going to have an organizational structure. So we have an entity dimension, which is your organizational structure. So entity is your business unit. It is whatever way you have decided to take your organization and break it up into smaller components so that you know how do you do the measurements properly. This means it could be a business unit, cost center, legal entity, or region. It's your organizational structure basically. Then we have a period dimension. So this is only 3 out of 8 required dimensions that are available, and I'll be talking about other dimensions and describe to you what they are. So we have given some names to them. So dimensions and hierarchies. So members of the dimensions are going to have are arranged, basically members of a dimensions are arranged in hierarchies. Upper level members are called parent members, and the member immediately below a parent member is referred to as it as child. This is referred as parent and child references. We are also going to have siblings. Siblings are the members that are at the same level under the same parent. We also have ancestors. Any members above an item within the tree structure is an ancestors. You also have descendants. The descendants are any level below an item. So last thing is that we have base members. So base members are the items that are at the lowest level. They are basically items that have no children. The data gets loaded into the base members. Now say for example, if you take total revenues as a parent, this parent has got 2 children, sales and revenues. For sales, total revenues, gross margin and income before taxes, these are my ancestors. For income before tax, these are all my descendants, gross margin, total revenue, sales, other revenues, total cost and salaries. Sales, other revenues and salaries are called as base members or level 0 members. So we generally load the data at level 0 member and data gets aggregated based on my consolidation properties. Okay, so when So when it comes to HFM and the hierarchy structures, we can only add or subtract within the hierarchy. If you're going to do any other operations like multiply, divide, or take a percentage, you have to write a rule. So what determines whether we have to add or subtract is the account type. So when we are going to create an accounts and we are going to set up all the properties of an account type is going to be one of the most important, because that is going to determine the behavior, whether it adds or subtracts with other ones. So also I want you to notice the revenue members. Typically in transaction systems, revenues, liabilities, and equities are credits, which means they are negative numbers. Your assets, your cost, your expenses are typically positive numbers or debits. So when we are bringing that data into HFM, because we can do adding or subtraction within the hierarchies, we typically flip the signs. So we bring everything in, we bring everything as a positive numbers. So for your equities, liabilities, and revenues, we are going to take those numbers and make them positive. We are going to handle the adding and addition and subtraction HFM. So here are our 8 required dimensions and custom dimensions. We will talk about each dimensions and the definition of each dimension here. The first one is scenario dimension. The scenario is a way that we categorize the data. The scenario makes up whether we are going to have an actual data or a budget data or a forecast data. It is a way that we segregate data here. The year and period make up calendar. The year is nothing more than what year it is, whether it is 2016 or 17 or 2018. The period dimension is where we are going to set up our time periods. Are we going to do monthly, weekly, quarterly, or yearly reporting? When it comes to HFM, we cannot get down to daily reporting. So the lowest we can do in our period dimension is the weeks. So we can have up to 52 weeks. View dimension. The view dimension is a kind of linked to a period dimension. The view defines how do you want to display the data across time periods. In other words, if we were to set up a report and put our accounts down the rows and our periods across the columns, how do you want to represent that numeric value for that given month? For example, March. Do you want to show just the March month activity so that the number there is just for what happened in March, or do you want to show it as an aggregated number up through March? So if you set the view to periodic, then across the months you're only going to see the activities for the given month. So set up the view to quarter to date, then for every 3 months you are going to get an aggregated number up to the quarter point of the activity throughout the time period. You set it to year to date, then every month it is going to be an accumulated activity up through that given month. So we have entity dimension. Entity, as we discussed earlier, entity is an organization structure. This is where you are going to determine how do you manage your business. Also, the entity dimension is going to determine our consolidation path. We'll talk about the other consolidation paths later in this class, but understand entity is the structure of the organizations. How do you take an organization and break up into different parts? Each part is an entity, which is nothing but we can also call it as a business unit, for example. Value dimension. The value dimension is probably one of the most difficult ones for the people that are brand new to HFM to understand. And I'm going to make it real simple for you. The value dimension is system defined, which means it's the value dimension members are created by the system. You cannot modify them. The value dimension is an audit trail, basically. The value dimension shows us the modifications to the data as we go through the consolidation process. So when somebody asks you what is value dimension, all you have to say is that it's an audit trail. And what are we auditing? We are auditing 4 different changes to the data that could happen during the consolidation process. The 4 changes that we will do it are manual adjustments anytime we do journal entries, currency translations anytime we convert from one currency to another. The value dimension tracks what is the original currency and what we convert it to. intercompany eliminations, what was the intercompany activity and how do we eliminate it, and consolidation percentages. So we are going to roll up 100% of the activity or something less. We'll talk about more about value dimension in the next class. Accounts dimension, and we also have custom dimensions associated with accounts dimension. So in our case study, we are going to use 4 custom dimensions. So I usually look at custom dimensions as an extension of the account dimension. Basically, we can take our accounts and break it down further with customs. In our case study, we are going to use custom 1 to be our products. We might take our sales account and break it down by products. Which product did we sell? We are going to have custom 2 as our customers. So when we sell a product, whom did we sell it to? So we are going to take our sales, we are going to break it down by product and by customer. Customer 3 is going to be our headcount. We would be tracking headcount by different band levels, or which different type of headcount do we have? Do we have an executive, junior executive, or a manager? We are going to use custom 4 for our balance sheets. To do our cash flow statements, we need to be able to track what was the opening balance of your cash and what is the ending balance, and what were the increases and decreases throughout the month. Intercompany dimension, it is the one specifically for identifying intercompany activity from external activity. When you have a given transaction, if there is a partner selected, that means that it is an internal transactions and it must go through the elimination process. If you select the member called ICP none, which means that it is not internal, that means it is an external, which will not go through the elimination process. The intercompany partner or ICP dimension is specifically for identifying intercompany activity from external activity. If it is intercompany, what was the partner to the transactions? What is the affiliate that the entity did business with? So these are all the 8 required dimensions shown here, and we'll also be creating these required dimensions plus 4 custom dimensions. The custom 1 would be the product, custom 2 would be the custom 2 would be customers, custom 3 would be headcount, and customer 4 would be balance sheet. So thank you so much. I'll be talking about the value dimensions in the next class.